Hi, this is Robert Rapier, and this is R Squared Energy TV. On this week's episode, I've got questions about natural gas, which industries might benefit the most from low prices over the next few years, and what the price target may be. I've got questions about the link between fracking and earthquakes, and then a question about whether Canada is in better shape economically than the U.S. The first questioner asked me also a question about contango and backwardation of natural gas and oil futures contracts. Um, I don't feel qualified to talk about that. I mean, I don't invest in futures. I don't invest in natural gas and oil. And while I'm familiar with the terminology, I'm really not the person to ask about those things. So I don't feel comfortable talking about that. So first question: what industries do you see benefiting the most from the current price of natural gas? The industries that will benefit the most are obviously the gas companies. The electric utilities that use gas will benefit from lower costs. Trucking companies that have actually shifted over to natural gas use in their trucks will have energy costs that are a fraction of the cost of oil. Chemical industry uses a lot of natural gas. They should benefit from the lower costs. And then, of course, consumers will see those from potentially lower electric bills and from lower heating costs. I saw a story recently that said the reason the high oil price is not hurting Americans more right now is because it's somewhat offset by very low natural gas prices. So the overall energy bill from consumers is not nearly as much as it would be if natural gas price had risen also like oil. Um, what price target for natural gas in the next 10 years? I think with the fracking there's a lot of new places that can be drilled. I think there's probably a ceiling. Maybe it's hard for me to imagine that gas prices could get much above $6 a million BTUs over the next 10 years, because as it creeps higher, there's plays that are marginally economical that they can go out and produce. So I think that's going to be somewhat of a ceiling on it. Is some of these marginal plays that they can actually open up and start producing as gas prices get up in the $5-6 range. So on page 62 of your book, you write that geologists have linked fracking to the earthquakes in Oklahoma and Ohio. I thought this was due to reinjection of the fracture fluids for disposal and not the actual hydraulic fracturing process. There was a report from an Oklahoma seismologist, and he pointed the finger directly at fracking for some of the earthquakes there. Now, it could be that that was the part where they were disposing the fluids. I don't know. I haven't read into that report, but there is a USGS report that's just come out that points to the disposal, and it says that looks to be directly responsible for causing some earthquakes. It would have been hard for me to imagine a few years ago that drilling or doing things underground like that could have enough of an impact to actually cause an earthquake. But this happened with the deep geothermal development over in Europe. They actually caused an earthquake, and that's been implicated now. The deep geothermal development has been slowed somewhat by the possibility that that can trigger earthquakes. Now, the defense against that is what I've heard is that can eliminate a larger earthquake in the future. That these faults are building up pressure, and that by releasing it at a lower pressure, you're really saving from a much larger earthquake in the future. I don't know if that's reasonable, but that's one defense I've heard against the issue that these things cause earthquakes. But it certainly bears watching. Um, Last question: do you think Canada is in better shape economically than the U.S.? Certainly, with respect to oil, they are. While a lot of people may not know that the U.S. produces about twice as much oil as Canada, we have about 9 times as many people. So we don't produce nearly enough for ourselves. So we import a lot of oil, and therefore we export a lot of money. Canada produces a fair amount of oil for their population. Their per capita production is a lot higher than U.S. per capita production. And so they are able to export oil to places like the U.S. And so as far as high oil prices go, that will benefit Canada. They will see money coming into the country. The U.S. at high oil prices sees money flowing out of the country. But of course, the U.S. is an important trading partner for Canada. So if high oil prices cause a slowdown in the U.S. economy, that's also going to have an impact on Canada. So it's hard to say overall that much higher prices are good for Canada, but it will bring in more oil revenues. One other point is that per capita consumption in the U.S. and Canada are very similar. They drive the same kind of cars that we do. Their living arrangements are similar. They're spread out like we are, and they drive big vehicles and so forth. It's just that in the U.S. we just have so many people, and that's our basic problem. And in Canada also, the gas prices are a little bit higher there than they are here because taxes are a little bit higher. But per capita consumption here and there is roughly the same, but per capita production there is much higher. So with that, that's this week's episode. Please tune in next week. Thank you.